Should you invest in a syndication or a REIT? Well, first of all, what are the differences between the two? Which makes for a better investment? In this video, I'm going to cover 5 differences between syndications and REITs. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. And if you don't know me, I'm Seth Ferguson, a 12-year real estate veteran, host of a real estate TV show, host of a real estate investment podcast, and I'm also the author of the real estate book, Sell for More. So let's get right into it and talk about the differences between REITs and syndications. First of all, number one, I want to cover the ownership structure. And actually, before we get into ownership, I just want to cover pronunciation because there's lots of different ways you can pronounce REIT. So you can say REIT, REIT, and this all stands for Real Estate Investment Trust. So maybe I'll switch back and forth and toggle how I say REIT, REIT, and just say Real Estate Investment Trust, just to make things a little bit fancier. So ownership. A REIT. A REIT is a company that most often is publicly traded, so you can buy shares of that company on the stock exchange or buy mutual funds that invest in the REIT or REIT. And basically this company, their product is their real estate portfolio. So they'll go out and buy and sell all sorts of properties, and you can buy shares of the company. You can buy shares of the company that owns the real estate. A syndication, on the other side, is a pooling of resources by investors. And I'll put a link to the video I did talking about syndications in more depth right up here so you can check it out. A syndication is a pooling of investors with capital, and then they combine with a general partner who's an active partner who will then take their capital and they will acquire a single real estate property. So in terms of ownership, with the REIT, you own shares, so you own a piece of the company that owns the real estate. But with the syndication, you're actually owning a direct interest in the property because you have the entity that owns the real estate, and within that entity, you have direct ownership. You have equity in that property through the ownership structure. So if having direct ownership in a property is important to you, syndication definitely comes out on top. But if you just want to buy and sell stocks, because basically that's what a REIT is, go ahead and you can buy and sell stocks and you have a lot more liquidity because you can buy and sell at any time, just like you're buying Amazon or Tesla or Bank of America or Coke, you name it. The second thing I want to talk about are the tax benefits. And this is why I covered this second, because the ownership structure is really important with how it relates to our tax position. So with the REIT here, remember we're buying shares of a company, and in a syndication, we have a direct ownership of the property. So with the REIT, with your stocks, you're going to be getting dividends. Now here's a couple things to keep in mind. The REIT, because it owns real estate, they can take advantage of depreciation, just like we can in a syndication, and depreciation is a wonderful thing. When you receive dividends, because you are a shareholder in the REIT, depreciation is already taken into account when you receive your dividends. So there's no additional depreciation you can claim because it's already factored into the dividend. Plus, your dividends that you receive are classified as earned income. So that's going to affect your tax position because you're going to be paying more tax on those dividends. With the syndication, because you have direct ownership of the property, you get flow-through tax credits. So you can actually use those tax credits to offset your income because we can take advantage of depreciation. Then we have bonus depreciation through cost segregation. And we have all these things that flow through, and you can actually use those to offset your other income. And this is why many high-income investors that invest in syndications, they love it because they're able to use it to reduce their tax liability. And you don't get this when you invest in stocks by buying stocks like a REIT. Number 3, let's talk about returns because this is why we invest. When we look at REITs in general and syndications, especially value-add syndications, which I am a big proponent of, you will find that REITs underperform syndications. So syndications, we're always looking, especially the deals I'm looking at, we're looking at deals that pencil out between 15 and 17% IRR annualized. With the REIT, you're probably going to be closer to 10 to 12%. Again, this is generally speaking, each REIT will be different, each syndication deal will be different. But as a whole, if you look at REITs versus syndications, your money is going to be put to work harder in a syndication with direct ownership, and then you can take advantage of depreciation and bonus depreciation. Number 4, how you invest. Like I said before, with a REIT or real estate investment trust, you're basically buying a stock. So it's like you're buying Coca-Cola or Bank of America or Amazon. You can buy the stock directly, you can buy it through a mutual fund. You're just basically buying a piece of paper. But with the syndication, you are investing in a direct interest in the property. So how do you actually invest in a syndication? Well, you're going to find a syndicator, a general partner, the active party in a syndication that's putting the money to work. They have the track record, they have the experience, they have the team, they have the deal flow, they have the market knowledge. They'll source all these things before they even approach you for capital. So what happens is a syndicator, a general partner, will have a property under contract. Then they have to go out and raise the capital for that project. Then they will approach you as the investor and say, Mr. or Mrs. Investor, I have this project. This is what we like about it. This is where we see this project going. Here is our underwriting. This is what we're looking at in terms of hold period, how long we're going to be in the property. This is the debt we are acquiring. And these are where the numbers are penciling out. What do you think? You at that point as an investor have a say in whether or not you want to invest in that property. It's totally your call. You can say, yes, looks great, let's invest, or no, I don't want to invest, give me a call for the next one. You are investing on a case-by-case basis, so you have a lot of control as to where your money is going. With the REIT, you're just buying a piece of paper. You are buying a stock. You have no control over which properties this REIT buys, whether they sell, whether they acquire new ones, which markets they go into. You have no say. You just own a piece of paper. You own the stock. With the syndication, it's on a deal-by-deal basis. A syndicator will approach you and you can say yes or no because you have full control over which projects, which properties you invest in. And then number 5, we have minimums. One of the advantages of a REIT or a REIT is you're just buying a stock. So you can get into it pretty cheaply. Depending on what the stock's selling for, you can buy however many shares you want. You can buy 100 shares, you can buy 400 shares, 500, 1,000 shares, whatever you want, whatever fits your budget. With syndications, it's a little bit different. Generally speaking, most syndicators are going to be working in the exempt market, so that's working with accredited investors. And I'll put a link right up here to my video talking about what makes an accredited investor and what criteria you have to meet to become an accredited investor. So we're dealing with a different class of investor. Somebody who just wants to buy stocks and trade stocks, well, you can buy a REIT and you can get in for a pretty low threshold. Now with syndications, we do have minimums. Not only do you have to meet the accredited investor criteria, but you also have minimums to invest in the project because no syndicator wants to have 1,500 people, 1,500 investors participating in one syndication. It doesn't work well for the investors and it doesn't work well with the syndicator. So this is why we have minimums. And depending on the syndicator, depending on the property, you could have minimums of $50,000, you could have minimums of $100,000, of $500,000. It really depends on the project, the syndicator, the scale of the property, the scope of the work that needs to be done. But there are definitely more hoops, more hurdles you have to go through to invest in a syndication. You generally have to be an accredited investor and you have to meet these minimums to actually invest in the property. So which one is best? Should you invest in a syndication or should you invest in a REIT? Well, it all comes down to what you're looking for and what your investment goals are. If you want to buy stocks, if you want to get in for a low amount of money, if you want to be very liquid and be able to sell after 6 months and get out and trade some other stocks, a REIT is a great way to get into it. You're buying shares of a company that owns a lot of real estate And so we know real estate is very stable. Your returns are generally going to be lower than investing in the syndication, but in exchange you get liquidity, which to some people is really important. But then with the syndication, you're going to have higher returns. You get to take advantage of depreciation and bonus depreciation. You get direct ownership in the property, which you don't get with the REIT. You get to decide where your money goes if you invest in that project or not with the syndication. Plus, you have all sorts of benefits too that come along with owning real estate. You can see it, you can touch it, you can feel it. With the REIT, you have a piece of paper. Even though that company does own real estate, it's not really the same thing. And one thing a lot of investors enjoy about syndications is their money is illiquid. That is a positive because you invest your money for 4 years, 5 years, 7 years. You can't touch it and it just goes to work, and you're able to use the depreciation to offset your tax liability. So these are 5 differences between REITs and syndications. I hope you found this useful. And if you'd like to learn more about the properties I'm currently looking at, head on over to callseth.com and set up a free 20-minute phone call with me. And if you like this video, if you found this useful, hit the like button, leave a comment, let me know what you think. Don't forget to subscribe. And until next time, happy investing.